Hi, have a few minutes if I promised you a sure way to earn over 10% monthly in the stock market? If you have at least $10,000 to invest, I promise you will always have control of it, and in your first month, for free we'll show you how to earn 10%. I guarantee you will profit over $1,500 in the very first month using our service. Sound too good to be possible? Would you let me prove it to you? What else do you have that is this promising? A 6-minute video shows you how. For free.
Well, who doesn't want to be wealthy? Everybody. But usually it takes hard work and then you're paying it out on bills. What would you do if a friend of yours called you up and said, "Hey buddy, we're going to get rich in the stock market"? Well, I've lost a lot of money in the stock market before. And I never really have met anybody that did well in the stock market. They seem to always lose money. So I told him not to sign anything. Don't do anything. I don't know what he's up to. Let me take a look at it first. That's when I saw the formula. They didn't call it the formula back then. They just called it a great way to make a lot of money in the stock market. It was impressive. I couldn't find anything wrong with it. I kept waiting for the shoe to drop. You know, you give me your money or something like that. Never happened. He said it had been given to him for free. And the person that gave it to him, it was given to him for free. And so he's given it for free as well. So no one's ever charged anything for this very simple formula, which only makes it sound even more too good to be possible. Especially when you find out that it promises a 10 to 40% monthly return. That sounds too good to be possible. I'm an open-minded skeptic, so I was very skeptical. But I'm open-minded. I'll look at anything. The formula looked like it would work, but I was skeptical. I had lost money in the Bloody Monday stock drop back in 1987. I sure didn't want to experience that. Matter of fact, I vowed back then I'd never get back into anything that had to do with the stock market. Here I am, I'm looking at it, and I said, okay, let's just do it on paper. Because you only got to do a couple of things every month. First month, on paper, I had a little bit over 18% return. Second month, it was a little over a 13% return. I said, it's going down. Well, the third month, it was a little over 43% return. And it was that way, back and forth, up and down, month after month. I finally had someone that just told me to either do it or forget it, in such a way that I just finally could not find any more reasons not to do it. And I had a little bit of money that if I lost it, it wouldn't kill me. I took $5,000 and started the formula. I tell people that $5,000 became 7 figures in 22 months. That makes the whole thing sound even more too good to be possible, doesn't it? What if I could prove it? What if I could prove you could take $5,000 to $10,000, turn it into 7 figures in a couple of years, without any real risk, without any real effort? Would you have anything else that would be that promising? I'm the one that named this the formula. Actually, I named it my TCB formula because it takes care of business. This formula makes money. It was Winston Churchill that said that, "I know that history will be very kind to me as I will be the one writing the history about me." I'm doing this video because I want to make certain that history is going to be kind about me. So, what's the formula promising? First of all, the formula is something that you're in full control of. Nobody's ever going to ask you to give you their money. Secondly, it's a simple, low-risk investment program. And more importantly, thirdly, it's going to promise you a 10 to 40% monthly return month after month after month. Had a lot of people try to tell me what it was because, to be honest with you, even though I was proving it to myself, I still didn't want to tell anybody. It took me a couple of years, and even then they had to dig it out of me, what I was doing. A lot of people try to guess what it is. Is it multi-level marketing? No, it's not multi-level marketing. Does it require recruiting? No, but like as not, if you're looking at this video, someone cared enough about you that they wanted you to take a look at it and see if you wanted to build wealth like they are. Is there going to require any education requirements? Well, there's a few things to learn, but no, you're not going to have to go to school for anything. Is it going to take a lot of time? You're only going to got to do 1 or 2 things every month. So no, it's not going to take much time. What is it then? It's a very low risk investment plan. It's simple and easy to use. Anybody can do it. It gives you complete financial control and allows anyone to do it. Month after month after month, 10 to 40% monthly returns. You ever heard of the rule of 72? It's a little formula designed to show you how long it will take you to double your money if you were promised a certain interest rate. As an example, if you had something that was promising you an 8% annual interest rate, if you would divide that by 72, you would find out that it would take you a little over 9 years to actually double your original money. What I'm about to show you is going to show that you can actually double your money in 4 to 6 months. The rule of 72 does just that. Now you can reverse that. Say you wanted to see what kind of a rate of return you'd have to have in order to double your money in 6 years. You just take 6 years divided by 72. You would then know you need to have an annual rate of 12% if you want to double your money every 6 years. What I'm about to show you, you're going to have a rule of 72 application where you're doubling the money every, conservatively, 5 to 6 months. It's called compound interest. I think it was Einstein that said the strongest force in the universe is compounded interest. And that's what this is. So what's it require of you to do this? Well, you do need a stock option trading account with a broker, online preferred. It's going to require to buy stock. Don't worry if you've never bought stock before, it's real easy to learn. And when you buy public stock, it's really giving you a shared ownership in a company where you share in the profits or the loss or the dividends or the benefit without you actually having to show up and operate the company. We're going to do 1 or 2 of those transactions a month. It's also going to require getting involved with stock options. Yeah, a lot of people don't know much about options. Quite frankly, those that speculate on options, when they buy them, it really is giving them an option to buy a stock at a certain agreed upon rate, but they have a certain time limit on when they can make the decision to buy the stock at that given rate. It gives them the right but not the obligation, in other words, to buy a stock. Most options that we'll be talking about expire every 3rd Friday of the month. Other than that, you just need some startup money. Doesn't seem to make a lot of difference how much. Most brokers that you set up an online account with is going to have some minimums, of anywhere from $2,500 to $10,000 to open up an account. I would advise at least $5,000 to $10,000 to comfortably get started. There's no limit to how much you can, and it doesn't really change the rate of return that you're going to get. Certainly if you don't have anything out there making you 10% monthly returns or more, you'd want to get that money moved over here because you're in control of it. Is there risk? Well, there's always going to be an element of risk, but the risk in the formula is so minimal, it's almost impossible to call it risky. The stock market itself is risky based on what they have taught people that they need to do in the stock market. Ask anyone, any broker, any analyst, anybody that recommends, every one of them is saying buy stock and hold it. It's the old buy and hold mentality that's been shoved down everybody's throats to where they've been brainwashed to believe that anything that they invest in needs to be bought and held on to for a period of time. If you used to buy, say, a stock like General Electric, and let's just presume that you could buy this stock at $10 a share, and you bought 1,000 shares of it, the buy and hold says if you hold it a while, it's going to go up in value, and it may. Maybe you hold it for 5 years and it goes up to, say, $13 a share. Well, that would improve your value to where you had about a $3,000 increase in net worth. The thing about it is no one knows when to sell the stock You'll get all kinds of different mixed recommendations on how to sell it. Most people won't. After all, if it went up in 5 years to where it was worth $13, why wouldn't it go up in another 5 years to say $16? But most stocks move up and then they move down. Sometimes they'll move down less money than what people paid for them. Say this stock that you bought for $10 went down to $9 a share. There's a funny little thing that happens when the price of a stock goes down below what you pay for it. People kind of freak out. They get to thinking about it, having restless nights where they can't sleep as they begin to realize this could go to $8. It could go to $5. Oh my God. It could go to zero and I lose everything. Better just get out of it now while I have a small loss. That's why the majority of the people lose money in the stock market. Happened to me back October of 1987 on Bloody Monday. Didn't know anything about the stock market, but my money was invested in the stock market through a broker who called me up and said that the market has lost over 28% and dropping. I'd lost tens of thousands of dollars in just less than a couple hours. He had no idea what to do. He said, you better sell it or you may lose more, and I sold it. About 3 weeks, the stock market was right back up to where it was. Had I just stayed there and kept it, I would have been fine. That's why people lose money in the stock market. When it gets there to where it's gone below what they invested, they freak out and they sell at a loss. Now, people that invest in options, they're not putting as much money on the line, so their risk for the amount of money at risk is low. You know, if $10 would buy a share of stock in a company, why not take that $10 and buy options in 5 different companies at $2? Yeah, the risk is that they have to have action on that stock by the time the options expire on the 3rd Friday. So their risk is based on time and whether or not the stock is going to perform the way that they was hoping it would. Nonetheless, there's on 1,000 shares, the most they could lose is their $2,000, whereas on the stock they could lose the entire $10 if it went really bad. The formula is not going to teach you how to lose money because it's not about buy and hold. You know, I compare it to the real estate business. I grew up in real estate. Say you had a piece of property down the street that's been on the market for quite a while, say 4 or 5 years, for say $1 million. Don't you think that the seller's getting a little nervous? He hadn't sold the property, he's paying taxes, he's paying insurance. What of you as a speculator? Thought you had someone that might buy that for $1.2 million, you can make a little money. Would the seller be happy if you wrote him a check for $1 million? Of course he would. But now who's going to be the nervous one? You are. You got $1 million laid out and you don't even know if you can sell the property for sure. Options in real estate are a great avenue to take, because if we went to the seller and said, hey, Mr. Seller, I'll write you a check right now for $50,000 if you'll just take that property off the market and give me the right but not the obligation to buy this property if I want it, say within the next 30 days. Would he be happy with that? Of course he'd be happy with it. He's got $50,000. What about you? Well, you're going to be a little happier because the most you'd ever lose is $50,000. And it gives you time to go see if you can sell that property for $1.2 million. In the first example, if you'd have paid them $1 million and everything went right and you sold for $1.2 million and made a nice $200,000 profit on your money, that would be sweet. But what if it didn't go that way? What if you couldn't get the property sold and it even went down in value and you had to sell it at a loss? That's pretty risky. At least on the options, the most you could ever have lost was the $50,000. And that's all the money you actually ever had to put out of your own money. So you make a nice nifty profit on your $50,000 if you're able to make the deal happen. That's exactly why the stock market works so well for people that they want to get involved with options. You have to understand why options were created. They were created around 60 to 65 years ago by the investment banking industry for a purpose. Speculators have that get rich quick mentality. For a little bit of money, they might hit the right option that will take off, and they get paid in millions of dollars. I kind of compare it to going to the casino. Have you ever been to Vegas? You walk in and you watch the people out there gambling, and I'm not a gambler. I like sure things. But they're out there gambling, hoping that they can hit rich. Get that one hand in poker. Get that one roll on the dice. Get that one crank on the slot machine that's going to make them get rich instantly. I'm certain, absolutely certain, that options were created with the concept of tapping into that mentality where people are drawn into putting a little bit of money down in hopes of striking it rich. You can check with all regulatory organizations, they will tell you the speculators that buy into options, the majority of them lose money. Very few hit it rich on speculating in options. But keep in mind, I'm not going to teach you how to speculate. I'm not going to sit here and kid you. We're not going to speculate one little bit. We want a sure thing. If you go to Vegas, you walk into that casino, you look around, who is it that you see that is making all the money? Is it the gambler or is it the house? Is it the guy in front of the poker table or the blackjack table or the slot machine, or is it the casino? Well, that's what we teach, because it's true about options. Somebody is always making money on those options. And it's not the speculator that's buying them. It's Wall Street that is selling it to the speculator. And they don't want you to know it. They want to keep this secret suppressed. But you can sell options too. You can be like the house. You can be like the casino. We're going to teach you how to tap into that gambling mentality of those speculators that want to buy options, by taking a position that the house is doing by selling options. A sure thing. So here's how the formula works. We're going to buy stock and we're going to sell options to the speculators that want to buy our stock. They're gambling that our stock is going to go up. And I can assure you that if we bought this stock here, say for $7 a share, bought 1,000 shares, that would be a $7,000 investment. Well, at the same time, in the options market, they're offering options for those that want to bet on this stock going up. And there'll be a variety of options. It could be $5, $6, $7, $8, $9, $10 strike prices. And each one of them has a price. The ones that the strike price is already below where the stock is accomplished, they're going to be higher priced options. And then there's a multitude of reasons why speculators would buy those options. But for the formula, the only option that we're interested in looking at is the option that the stock is not accomplished yet. In this particular example, the $8 option. And you'll notice that in this example, it could be bought by a speculator for $1.50. That's what the broker is advertising at. That's Wall Street has listed the price at. Here's what we do. We'll buy that 1,000 shares of stock for $7 a share. Milliseconds later, if we choose to do it milliseconds later, we can now sell that $8 strike price option for $1.50. We immediately have $1,500. What's our rate of return? Over 20% return. It's not a buy and hold situation. It's a sale to someone that's buying and holding it till the third Friday. He's got the right, but not the obligation, to buy our stock for $8 a share. And he's under the gun. He's got to get a decision made by the third Friday. We don't have anything that we have to do. We could take our $1,500 and go shopping for it. We have no more obligation. That money is ours right now. So, what if the stock goes above $8 a share? I can assure you that speculator is going to exercise his right. He's going to pay us $8 a share for a stock that we gave $7 a share for. That gives us an additional $1 profit on 1,000 shares. If you combine that 1,000 with our 1,500, we now have a $2,500 profit, or in other words, altogether just a little over a 35% return. What if it doesn't go above $8? That option will expire on the third Friday, absolutely worthless. Come Monday morning, your stock is unpledged. You can now sell options into the next month. Month after month after month. Just like clockwork. Just like a casino. Just like a casino, we're selling that option. Month after month after month. No speculation. I've been doing this for a little bit when I suddenly realized brokers do offer margin accounts to where they'll put up a portion of the money to buy that stock without taking your profits. Yes, they'll charge you a very minimal fee to give you that money. Plus they get commissions, because when I bought that stock, I paid a commission. When I sold that option, I paid them a commission. Well, by freeing up some of my money, they're certain that I'm going to take that freed up money and buy more stock, sell more options. They generate into their pocket more commissions. And as I said, they charge a very minimal fee for the money while you're using it. Let's redo the numbers then. If the broker would offer to pay just half of the amount of money to buy this stock, and I put up the other half, but I get to keep all the profits, now what's my rate of return? On my $3,500, when I sell that option, I have a return of a little over 42%. What if it exercises the stock? Well, now we're looking at over a 70% return. If you understand what I'm showing you, let me refer you back to the rule of 72. Without margin money, we're doubling our money in about 4 months with this example. With margin of money, we're doing it in half that time. Now this is just an example. Conservatively, I believe that you can always look that you'll be doubling your money every 5 to 6 months. Here's what's important. Here's what makes this so different than anything anyone's ever looked at before. It has 5 rules that have to be followed. Conservatively, I believe that you can always look that you'll be doubling your money every 5 to 6 months. Here's what's important. Here's what makes this so different than anything that anyone's ever looked at before. It has 5 rules that have to be followed. They're called 5 critical points, and it's required. Can't vary away from it. First of all, whatever stock that you want to apply the formula to, it has got to have accomplished at least 500,000 shares in daily trading. Secondly, it's got to have paid at least 1 dividend in the last year. Thirdly, it cannot have any negative outstanding lawsuits against it. Fourthly, there's analysts that recommend to either buy, sell, or hold these stocks. This requires that you have more analysts recommending to buy and hold than to sell or hold. And finally, number 5, which very easily could be the most important, is if we took all the stocks in the stock market and kind of lumped them into 3 categories, they would probably fall into a category that looked like this. The first category is where that stock's working its way up. Pharmaceutical stocks are a lot like this. They're working on a drug that is getting a lot of interest, and then the FDA comes back and says they got to go back to the drawing board, and the stock will plummet. Then it'll get some interest again, and it'll plummet. The formula does not work well with stocks like this. Second type of stock is the one that's kind of a boring stock and it loses interest over a period of time. Agricultural stocks are a lot like that until a crop report comes out and it'll spike up. Then it goes back down until the next crop report. Again, the formula should not be exercised on a stock like that. But believe it or not, there are stocks out there that stay in a very specific zone most of the time. Most of them you will not have ever heard of. They're not your blue chip stocks who often move with radical choppy trading. No, these are stocks that don't seem to care whether we have a Republican or a Democrat administration. Doesn't seem to care if we're in a inflation or recessionary period. It doesn't seem to mind if we're getting in or out of a war. They're always right there consistently in this range. And that's the stock that has got to be used to do this. So what I have just done, I have just given you what was given to me and thousands of others, absolutely free. It's free to you to go out now and do exactly what many others have done. As long as you stick to the 5 critical points and never veer away from these, your risk will be literally nearly none at all. And you'll be getting a average of 10 to 40% monthly return. Here's what happened. After a couple of years, I finally relented and told some 8 people that worked where I worked what I was doing. They were just like me, skeptical, waiting for that shoe to drop where maybe I was going to ask them to have their money. I said, no, this is given to me for free. I'm giving it to you for free. They were skeptical. But after a while, it started working for them. Unlike me, where I kept it to myself, they couldn't keep their mouth shut. They started telling everybody. I started getting phone calls from people I never knew, asking me to verify the formula. I might have been a little rude at first. I told them to go back and talk to whoever talked to them about it. But the phone calls increased to where I had such a large number it became distracting. So I hired a couple of girls to answer the phone. Told them, just tell these folks they can make their way to Branson, Missouri. Here's 2 meeting times that they can come to, and I'll show them and answer all their questions. Still gave it away for free. That was over 15 years ago. Thousands, more like tens of thousands, have seen the formula absolutely free. Thought this would help me get rid of all the pestering phone calls, but as it was, the girl said now those people that had looked at the formula now was calling back. They wanted to know what my research was on the 5 critical points. I'm shuffling 3 careers, raising a large family. I'm able to find time to do my research. Why can't these people? One old boy offered $20,000 for my research, according to the girls. And every one of them offered to pay me money, the lowest being $500. So I decided to set up a service for those that didn't want to do the research. I had a software written and designed to do all the work on the 5 critical points. Had all the girls call up everybody and ask them what they'd be willing to pay. Would they be willing to pay to get the top 10 plays that my software would find? Would they pay for that on a monthly basis? It was 100% unanimous. They all said yes. That's what we would be willing to do. My problem was this, that the software gave us too many stocks to sort through. So in a short amount of time, we started adding more critical points. We have adjusted it all the way up to 21 critical points that is wired down, then narrowed down the field on how many stocks, which is still hundreds of stocks that fit the criteria for 21 critical points. We offer the service with the top 10 plays coming out each month, where they get the top 10 plays and they get from me access to me by text or email to tutor them and give them their instructions that they need a little help with placing their trades. Also gives them a free subscription to my news blog, the Timeline News. So for $150 a month to get top 10 plays, which look like this. If they can point and click, all they got to do is look at the symbol, look it up, And as long as the stock is in a range that's recommended, and the option is in the range it's recommended, they're going to get this amount of rate of return on their play. Simple as that. There is a discount if they want to pay for the subscription by the year. The subscription can be canceled at any time. They're not locked into anything. We have two rules when we teach the formula. Rule number one, we'll take our profits up front. Rule number two, see rule number one, we'll still take our profits up front. We have a mission statement to educate our students as to how to take full possession of their own money and learn to increase their wealth with my TCB formula. Simple as that. Came a point in time where the girls were getting a different kind of phone call. People that were making stupid mistakes. I made some stupid mistakes in my first year. First of all, I did not realize that not every stockbroker out there will approve this kind of trading. They want to be the house. They want to be the casino. They don't want us being that profitable. Not all of them are that way, but many of them have minimum standards. They want the $1 million accounts, not the little tiny accounts. It's unfamiliar territory for the average person, so even in the application process, they were making mistakes. I made mistakes on the application process that stalled getting the formula started. The trading platforms are all Greek. They're all confusing. One of the biggest mistakes that I made, and these people were making, that we would accidentally buy the option instead of sell the option. So what I did, I put together an advanced quick start program that if they wanted to pay a registration fee, which I would oversee them for 2 months, giving them full assistance in just one day. I could set up and get their application and get them fully qualified with a trading account, with the right broker for this type of trading. And then I give them full assistance in explaining and coaching the use of the trading platforms and tools that apply to what we do in the terms of trading in that broker's account. And then we include those first 2 months of the top 10 playlist, giving them those plays, and my personal oversight on all trades in a tutoring service. Still getting the free subscription to the Timeline News with a one-time quick start registration at this time of $1,545. They can have an express start, something that in less than a few weeks they're going to be making the kind of money that I wasn't able to finally put into my pocket for 7 or 8 months because of all the mistakes I had been making. I include 100% money back guarantee with this, to where if in their first month they do not make this registration plus a profit back in the first month, we give them a full refund. It does require that they have to start with at least a $10,000 margin account or a $20,000 cash account. The money back guarantee has no other hitches. In over 13 years of offering this, have never been in a situation yet where I even come close to having to refund that money. Is people easily make their registration and a profit in their first month. You know, for me, it's about my family. I have a large family. I'm a single dad. I have a big responsibility. My wife, when she passed away of cancer, had set up a nonprofit organization that we're able to subsidize with the earnings that we make from the formula, as well as many other worthwhile causes. What would this do for you? What kind of changes in your life would it be if you could reach 7 figures? You know, it is said that success is that place in the road where preparation and an opportunity meet at the same exact time. Is that what has happened to you today in looking at this wonderful opportunity? Let me tell you that this is an opportunity that was only offered to me one time. Been doing it over 18 years. I've never had anyone offer to me again. This form of trading is so suppressed by those who put it together. They do not want people to know about it. They don't want everybody to be the house. They don't want everybody to be the casino. So they keep it suppressed. They want everybody to be gamblers, speculators, and buy these options. So they keep it quiet to keep it suppressed. It's not advertised. And the very fact that you've seen it today should tell you that if you've never seen it before in the last 60 or 65 years, you really ought to take a very close look at it. Let me give you one last example. I mentioned earlier, $5,000 to $10,000 should give you 7 figures in a couple of years. What if you had something that would get around a 10 to 11% return? Let me show you a calculation here of what it would look like. Here you're going to see a rate of return. You're going to see that it's over 10%. And I want you to look very carefully as I point to you what the annual rate of return will be. Now look at what the compounded rate of return will be. That being where you left the profits in there and reinvested it as well. And then look all the way down to this bottom line. That if you kept that money in there, rolling it over with just a little over 10% monthly return, over and over and over again. Look here at this number. How many months down the road? It will only be in less than 4 years that you will have 7 figures. What if it took longer than that? What if it took 4.5 years? What if it took 5 years? My question to you, do you have anything that promising that's going to offer you that kind of rate of return and that kind of wealth in just a few years? If you do, please contact me. I'd like to take a look at that. If not, maybe it's time for you to get involved with this. You can go to the website that's listed on this movie. You can get enrolled immediately right here at the end of this movie at the link that's being offered and get started. You'll always have someone available to you to tutor and help you along, coach you as long as you want to, and get your profit started in less than a month. Thank you and good evening. I do want to share with you a story that was given to me the very first night that I saw this. It was told to me that when Wall Street developed, it was told to me that when the investment banking industry at Wall Street created options and this incredible opportunity, they wanted to keep it suppressed. There was this investment banker that was being hauled to Wall Street every day by the same cab driver. After decades of running this guy back and forth, he was going to retire, and he told the cab driver he wanted to give him a little bonus for being there for him whenever he needed him. And he offered to give him this formula with provisions. And number one, he couldn't tell anybody about it. And number two, he would never explain how he came across it. I was told that at one time, this cab driver was the second largest income earner in New York. When the investment banker died, the cab driver did not feel obligated to keep his promise any longer. So, he decided to write a book about his relationship with this banker and how he gave him this wonderful formula. The powerful banking industry, even though the book got published, it never got released, as they got it suppressed. Cab driver started a different, so the cab driver tried a different approach. He had a book written about stocks, mutual funds, IRAs, stock splits, zero down real estate. Somewhere in this book he hid a chapter about this formula. The book got published, and a limited amount of books got released before the powerful banking industry got it suppressed again. That's the story that was told to me. How did I see it? Well, the story continues. The guy that was showing it to me in a room full of other people said that he got it from his buddy that he was in the Marines with, who was now a stockbroker, who was a bit of a garage salesman. And he had gone to a garage sale, and he liked to collect books. And he found this box of books, paid his 4 bits, took the box home, sorted out the cookbooks, the children's books, all the different books, and he come across this one book, and he's looking at the book, and he's, okay, stocks, I know about that, I know about mutual funds, I know about IRA, whoa, what's this? He'd been to school for this, and he had never seen anything like this. he started applying the formula and the 5 critical points. Story told me was that after 5 or 6 months he was down at his bank, and the banker called him over and asked him, if he had any stock tips, that he'd seen the size of the deposits that he'd been making lately. He knew he was a stockbroker. He said, "No, it's not a stock tip, it's this crazy formula I come across." The inquisitive banker pried him to tell him about the formula. And once he got to explain it to him, he took him over in the private office and grilled him on where he come across the formula. Once he explained to him how he come across it, the banker warned him that he should keep it very, very quiet, as the banking industry had created this for their purpose, not for the public. I was told that this stockbroker then asked him how they could justify taking their depositors' money and paying them such a small amount of money every year for their deposit when they're making 10 to 40% a month. The answer was that it was designed for that purpose, and it was going to be kept that way. That Marine buddy of his that was a stockbroker set out to tell all of his buddies about it, who had told it to that one person that's in the room that was sharing it with me and a room full of other people. I share the story with you so you'll understand why you don't hear that everybody's doing this. It is kept very suppressed, and the baton is handed down from one person to the next, who have handed it down to the next person. And you might even be now obligated to take the baton and hand it down to the next person yourself. Happy trading and good evening.